Think of a comparison and think how stupid it sounds if I said to you, oh, Sydney Harbour real estate's going to go up 100x. And I could pretty much show you how and why it was going to happen by 2030. You just do everything you could to buy as much property as you possibly could, or build it, or start real estate agents, anything. When people tell you about cryptocurrency, people are like, well, I'm not sure about that. The government's going to ban it, or, whatever it is, because people fear change. And this is a gigantic change, but it's really exciting. What you do when you create an excess amount of something, so let's say iron ore in Australia, if you pull too much out of the ground, demand collapses. I mean, you've got too much supply, so prices fall, right? So if you create too much supply of a currency, and we see it because the banks are hoarding this stuff, the price of the currency falls. Now, we grew up in a world where the Aussie dollar goes up against the US dollar or goes down, or the euro goes up against the Aussie, right? That's the relative valuation. But Australia, New Zealand, Japan, Europe, the UK, Canada, the US, they're all printing money. So what happens is the value of all of these currencies falls together. So you're like, well, how can that work? Surely one has to go against another. No, they fall against things of scarce supply. Gold, Bitcoin, real estate, equities. Those are why these things go up so much. It's the value of the denominator goes down, the fiat currency. So if you ever look at the chart of the Venezuelan stock market, it's the best performing stock market in the world and has been forever, but it's not. That is priced in Bolivar, but the currency keeps devaluing about 70% a year. When you put it into US dollars, the stock market's gone down a lot. This is what is going on. So the central banks around the world, the G4 big central banks, are printing currency at the rate of about 15% a year. So your hurdle on your investments is now 15% a year, or you're getting poorer. I.e., you can afford less of a house or less investments every year because of this. And crypto is one of the only things that outperforms the central bank balance sheets. So I checked this and looked at real estate prices in Germany against the ECB balance sheet. Flatline. They're the same thing. Well, German real estate looks like it's going up. Swedish real estate, UK real estate, Australian real estate, Canadian real estate, US real estate, they're all the same. What they're doing is reflecting the fall in the value of the currencies created by the central banks creating too much currency. We've got the world's most indebted economies. What would any of us do? What are you going to do? Raise rates and destroy the economy? Let inflation run and destroy the debt? Or debase your currency? Well, you'll try and do all of as much as you can of not letting it blow up. So you'll just keep printing money, buying assets, don't allow recessions. Whatever you do, don't let the collateral go bust. And that's my view. And because it is risky in the way that it's volatile. So it's not a risky investment. It's not going to go bust. It's volatile, but you get more than compensated for these big price swings by the price rises, because the cycle tends to see like a 70% downside and a 10x upside every few years. So you get more than compensated for the risk. But people aren't used to taking risk anymore because the central banks stop anything bad happening or anything else. But yes, if you've got the longer term time horizon, you just buy this stuff, and when it sells off, you buy more of it and just hold it, as you would do with gold. I advise an elderly Italian who is a very famous large family office in Italy. And he's the patron. He's 86 years old. And he loves gold. His crypto positions are now larger than his gold positions. And risk adjusted, they're like 4 times as big. Now, he's a cool guy and he likes trading. But if an 86-year-old Italian, who's a very famous guy, has put most of his kind of liquid net worth in it, you understand that it's robbing gold, because he's a classic gold investor. He's a classic gold investor. if you extrapolate the numbers, we will get to 1 billion users.
1 billion users
by 2024.
Well,
we will get to 4 billion users by the end of the decade. It is decentralized. There's no company to sue. There's nobody to go after. So the only people you can go after is your own citizens for owning it.
Yeah.
If I'm right and we go up as far and as fast as I think we're going to go, I think that ship sailed. Probably sailed about 2 or 3 years ago, where they could have done something about it. I think it's almost impossible now because of the speed of adoption, how many businesses, how much capital is in the space, they would even dare to do it. And don't forget, in the US alone, the largest part of the voting population is now the millennials. What are you going to do? Tell them they shouldn't have the upside?
No, they love this stuff. They love it.
And guess what? They're voters. There's no way they can stop this. What do central banks and governments actually want? Governments want one thing and one thing only: their fair share of the tax take. We've got open economy, so I can send money to you as much as I want. You could send it to me. And as long as we pass AML and KYC, nobody cares, right? Because we've got open economies. So they're not worried about us moving money around. What they want is, if I'm making money, I should get charged capital gains tax on it. If I'm making income or interest, I want to get paid income tax on it. And they don't want you to keep that out of the system. And that's fair enough, right? So that, I think, is the battle. The central banks don't want to lose control of the banking that they oversee because they think control is the right thing. They will put a set of controls around some of this, but they can't around all of it. So they'll try and restrict some uses for some people. All they can regulate is how you use it. So I don't think it's easy in this digital world where we can operate freely in ways that we want, to make it that easy to stop, let's say, us borrowing and lending or investing in crypto. And I don't think that that is their ambition. But there's this thing called DeFi, decentralized finance, that is rapidly going to disrupt the banking system. They're going to worry hell about that because they can't control it then. Why do the central banks need to control banks? Well, banks are risky and they blow up, so we need to control them, right? Well, they still blow up, even with these people controlling them, so that doesn't really help. But they also do that because banks are the way of using monetary policy. Central bank cuts interest rates, the bank pass it on, that all works. So how does that work with this new decentralized world? Well, they don't know the answer. That's why they're building these central bank digital currencies, because then they can work in this world too. So if they want to give you a higher rate of interest than me, they can. Or if they want to give you a stimulus check and take tax from me, they can do anything they want with this new formula. So it changes how monetary policy works. And I don't think we'll just see this cutting of interest rates or printing of money as the way that the central banks operate. So I think everything's changing.